What's going on, goats? Welcome back to BooKoo Bucks. My name is Raymo, and today I'll be breaking down my trade on oil futures from this morning. First and foremost, let's go ahead and break down or show you the execution that I had taken. Now let's go ahead back to the charts and break down exactly why I was looking for longs. Well, ultimately, I was looking for longs mainly due to the fact that price has taken out a lot of sell side liquidity represented on the daily time frame with these daily lows. So we see these lows getting swept. We can even see these lows getting swept right there. And let me zoom in a tad bit more. We had this low being swept. And then lastly, this low as well over here. So either way, usually when you see price take out a daily low or even just a level of sell side liquidity, but specifically here on the dailies after price took out the daily wicks, we had a reversal, and then I was anticipating another reversal to come into play. I did understand on the lower time frame, specifically the 15-minute time frame, price was still bearish. For example, here we had a 15-minute high down to this 15-minute low. So I was still considering this as a bearish structure, but seeing that price just swept out this daily low that we just marked up right here. Also seeing that price took out Asia's low. So we basically have two areas of sell side liquidity or two key areas of sell side liquidity being swept. I was hoping that price would want to reverse from here. Ultimately, it did reverse as we get this big bullish push, but it was very short lived. That's why in the Discord, when I posted that entry, I basically stated that even though this is a nice entry, I'm kind of hoping that price goes a bit higher, but ultimately, at that point, since price is still in bear structure, I have to basically perceive it as a retracement. But right at the opening of London, price took out Asia's low. We also kind of already had that daily low being swept too. I went down to the 1 minute time frame to find an entry. And on the 1 minute time frame, I was able to look at this and identify this as a break of structure. The reason why this is a break of structure, because we have the structure high down to low and price breaks above. Once it breaks above, I'm looking for price to retrace down into discount before looking for longs. In this case, using swing low up to swing high, we can see how price got underneath the 50% and then price started to kind of wick away from here. At this point, I really wasn't sure if price wanted to dive deeper into discount or price was only given this slight pullback to then push higher. So all I really did was I went ahead and took a long basically off of that wick. And that's how you kind of see my entry basically right there on that bearish candle. But again, I'm mainly buying on this move because I've seen price dip down into discount. If you want to, you can go down to the lower time frame, such as the 15-second, to clear this up. But to make it very simple, 1 minute BOS price pulled back into discount, and I took a long position off of that move. And I still had my stop loss underneath the 1 minute low, just in case price did want to go higher. So my entry is here, stop loss here, and if price wanted to come on lower before going higher, I would be perfectly fine because my stop loss is in a good spot, of course. So then here, I was kind of hoping that price would actually break above this 15-minute high. It looks a tad bit cleaner on the 5 minute, so I'll just show up the 5 minute here. We had this 5 minute high down to this 5 minute low. If you notice, price did not break above it. So seeing that price reverse and went bearish from here makes perfect and logical sense because this was simply bearish structure. This was simply price pulling back up into premium, and this was price tapping into the extreme order block and taking out some buy sell liquidity while tapping into that order block as well. So ultimately, this wasn't a bad trade setup. I was just looking to capitalize on this a bit more and willing to hold on to it a tad bit longer. I probably should have taken my profits up here for that 1 to 3.5 ish setup. But again, I did hold on to it. So ultimately, even though price did go my direction, I moved my stop loss to break even, allowed it to play out, and then it hit my break even at the end of the day. So ultimately, you can see how it wasn't a bad setup in the sense that I found my entry and I did find some profit and I was able to move my stop loss to break even, so there wasn't much of a loss. But as I always state, if the lower time frame is still bearish, we have to understand or have to continue to have that bearish bias. We may have all the reasons why we want to see price go long, whether it's a sell side liquidity sweep, whether price is tapping into a higher time frame POI. If the lower time frames are still bearish until price switches to go bullish, we have to maintain that bearish bias, right? Even here, we have a structure high down to the low. Even as price is making higher highs and higher lows, we understand that this is simply internal structure and we have to maintain the bearish bias. We may have all the reasons why we want to look for longs off of this extreme order block and so on and so forth. But until price gives us that BOS of some sort, then we can look for those longs. But until then, keep following that bearish bias. And if you find yourself in a situation like this, where you are longing before that break of structure comes into play, just understand what you're getting yourself into. And at the very least, try to put yourself in a risk free position just in case price does not fully go in the direction that you obviously want it to. So hopefully that makes sense. If you guys have any comments, questions, or concerns, drop one down below. Thank you for watching, and I'll catch you in the next one.